Hi everyone, my last video was on why I'm still bullish about crypto, and this will be part 2 of that thesis, looking in more detail this time at the United States and Janet Yellen at the US Treasury in particular, which as the largest economy in the world is a good starting point to understand global financial markets, even though my next video after this will actually be on Japan's carry trade, being one of the largest threats to the economy. But because the US Treasury has committed to adding more liquidity into financial markets in the lead up to the USA elections taking place in November, and the near 100% chance of lower interest rates in September by the Federal Reserve, we know what both of these things mean. More liquidity and lower interest rates tend to mean higher asset prices, which is obviously bullish for crypto. But please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a quick reminder, you can contact me if you're looking for crypto coaching. You can sign up for a free account with Koinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific tax advice based on your personal circumstances, I've partnered with a leading crypto tax company in Myna, and I'll leave a link to contact them directly in the description to this video if you'd like to. And finally, I've included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage that's out there, with 2 new models released recently in the Trezor Safe 3 and Trezor Safe 5. Just a reminder that nothing contained here is financial advice, and let's jump straight in. Firstly, let's take a look at the US Federal Reserve's reverse repo, which is a short-term investment agreement where institutions such as banks, hedge funds, money market funds, etc. can buy securities, or in other words, place their cash with the Fed, the US central bank, often overnight, and the Fed will then buy these securities back at a higher price. Hence the incentive, because of the return that these institutions get. However, the reverse repo has dropped to its lowest level in over 3 years, as you can see here from an article from the 5th of August. So let's take a look at that in a bit more detail. Because you can see here the reverse repo graph since 2021, when it wasn't really being used at all. And then it declined from over $2.5 trillion that it had risen to by December 2022, all the way down to $286.6 billion on the 7th of August at the time of researching this video, which is obviously a huge drop of well over $2 trillion. So to explain that a bit, this money, or call it $2 trillion, that isn't now in the Fed's reverse repo because of the decline that we've just seen, went from the Fed back into the financial markets, which, as we know, tends to increase asset prices when there's more liquidity. And for example, as you can see here, this is when Bitcoin exploded from $16,644 on the same day in December 2022, which is the beginning of this graph, by the way, rising to over $72,000. And there are more factors than just the reverse repo here, but we're looking at liquidity entering the market in the US, which is a bullish sign for crypto. Let's now move from the Fed to Janet Yellen at the US Treasury and look at US Treasury bills, or T-bills. These are short-term debt securities that are backed by the US Treasury with a maturity of less than 1 year with no coupon or regular interest payments, in other words. So they're seen as being very safe and liquid investments, but tend to have lower returns, and there aren't regular payments leading up to its maturity. But the US Treasury has increased the number of US Treasury bills throughout 2023 pretty much, as you can see here. So all the money market funds and other financial institutions that held money with the Fed through the reverse repo, if we link it back to the reverse repo graph again, Well, they potentially saw the opportunity to gain the yields from this increasing number of short-term T-bills, which are very liquid, so almost as good as cash in other words. This therefore is another example of how a lot of money has moved away from the Fed and into the broader financial markets, leading to higher asset prices, for example Bitcoin that we saw before, but also the Nasdaq, stock markets, etc., that all went up as well during this period. So that explains a bit about what's happened, but what might happen from now? Well, firstly, having seen the increase in T-bills that the US Treasury has issued, in its 2024 Q3 report on the 31st of July, it confirmed that the US will continue offering more T-bills, about an additional $125 billion worth, with a slight increase in the number of short-dated T-bills, as you can see here. But they're basically maintaining a high level of T-bill issuance and certainly not reducing this. So this is likely to mean a bit more money coming away from being invested in the Fed's reverse repo and back into the markets, which again is positive for assets. And I will include a link to the most recent quarterly refunding documents from the US Treasury's website in the description to this video if you want to check this out for yourself. And secondly, in some bigger news, the US Treasury has also introduced a buyback program, which is where the Treasury will buy illiquid, longer dated debt securities and fund these purchases by issuing even more T-bills. And $50 billion worth of buybacks will occur between now and the end of October 2024 alone. The first two of which you can see here at $4 billion and $2 billion that already started on the 7th of August. And you can find a link to the full schedule for this in the description to the video again, should you want to check this out. But again, this means even more liquidity injected into the financial markets by the US government, which is bullish for assets and crypto. And finally, let's take a look at the US TGA account, or Treasury General Account, which is the US Treasury's account and is run by Janet Yellen at the Treasury, obviously. Well, as you can see here from this graph, there was a high of over $1.8 trillion in the TGA in 2020, and there's now about $769 billion in this account. And because we have the same US debt ceiling issue coming into play again on the 1st of January 2025, the US Treasury might have to use this $769 billion that's held in its TGA account to avoid or delay a shutdown and to fund the government in the lead up to the elections to make them look good and to be re-elected. And this means that more liquidity would again be added into the financial markets. So to summarize, and I'm trying to put things as simply as possible and not use too many metrics or too much terminology, but let's say as a very rough estimate, there's about $100 billion worth of additional T-bills purchased. And it doesn't mean they'll sell these, by the way, as they're struggling to at the moment in the current market. But let's also say $50 billion worth of buybacks, which is what the Treasury stated. And then let's say about half of the $769 billion held in the TGA account is used. And I think 750 might be a bit easier for the maths, but this would be $375 billion. So we'd be looking at over $500 billion worth more liquidity being added into the markets in the next couple of months alone. And this is just looking at the US Treasury, not at the rate cuts by Jerome Powell at the Fed, which, as we know, would also be positive for assets like crypto, because there is a 71.5% chance of a 0.5% interest rate cut in September, and basically a 100% chance of a 0.25% cut, as you can see here, according to CME FedWatch. And the US needs lower rates to be able to pay the interest on the huge, ever-increasing debt that it has, as you can see here from the graph that goes all the way back to 1970. and it's actually now surpassed $35 trillion apparently, with this amount of debt equating to more than $100,000 per person in the United States, which is incredible. And the interest payments on that huge debt surpassed $1 trillion in Q4 of 2023, as you can see here, which have basically doubled since about 2020 and are ever increasing. So lower interest rates would help with its debt refinancing. And again, to try to summarize, as it does get quite complex with the many metrics and with Jerome Powell at the Fed and Janet Yellen at the Treasury having many tools at their disposal, but Jerome Powell at the Fed is basically asking the Treasury to stop injecting liquidity as it increases inflation and then it can't lower rates. And Janet Yellen at the US Treasury is telling the Fed that it's their job to get inflation under control and be able to lower interest rates, and that they have priorities in areas that they need to spend money on. So it's a bit of a catch-22 in some ways. But that ends this video looking at the increase of liquidity in the US and why I'm still bullish about crypto. And as always, I'd love to know what you think in the comments below about it. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. There are also links to Koinly, Trezor, and to contact Myna in the description of the video also, as I mentioned at the start of this video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.